Good evening. This is Tom Alexander. It is Wednesday, January 22nd. This is a special midweek stock market report. Uh, Something interesting as usual. It's going on in the stock indices, and the SPX is double topping now. Has it double topped? That's a different story. But today it did double top against an all-time high. Both the print high and a closing high. Show that in just a minute. By the way, if you would like to receive and see all the other reports that I've done, let me show you. You can go here, alexandertrading.com. Click on weekly update. Now, the weekly update is free. You have to register, but it's free. You click on it, you can see this week's update, which will be posted. You can see the weekend reports for the past couple of years, etc. Make note, I have just published a new book on day trading using auction market principles. You can click here and you can see what that's all about if you're interested. Okay, let's talk about the stock market now. Okay, so this is the SPX. So where are we? What's going on here in the bigger picture? Well, we're certainly, the big debate is, okay, we're in a bull market or bear market. Well, everything suggests we're still in a bull market based on the activity off of this low. Now, the SPX is leading the charge higher. The other indices are lagging to one degree or another. Let's just take a look at those. So this is the SPX. Here's the index. The index is a little bit behind, as you can see. The Russell, let me find well, here's the Dow. So we'll just take a look at the Dow. The Dow is how far are we from a new all-time high there? Let's see, from the close. So about 2%. The Russell is lagging as usual, but that's just the nature of the Russell to lag. Let's go to a daily. So here's the Russell. You can see it's behind New York Composite. Where are you? Here we go. It's lagging a little bit, but it's not too far behind either. So anyway, the point of this is that, and this is not too unusual. You've got the SPX leading the charge, so the SPX and NDX are leading the charge higher. Eventually, to confirm the bull trend, the other indices need to catch up, need to make new all-time highs. But the reaction off of that January 13th low is really, really strong. Breadth is strong at the moment. Now, short term, there's an issue with breadth, and that's one thing I want to talk about tonight. But let's go back to the SPX real quickly here. A few things. Okay, so from a trading perspective, if I'm a long-term trader, investor, this looks fine. We're making a series of higher highs and higher lows. Clearly now, this level in here is important. We've had this level tested now. This was a test, really, of what occurred back in here. And you can see it held. We didn't quite get down to it. But again, going forward now, in the long term, this is an absolutely critical level in the bull market. So we can assume, I'm going to assume for now, we're in a bull market. We're going higher to one degree or another without taking this low out. However, you're not going to continue higher. And those of you that follow my work know that I say this all the time. And this is an auction market concept, okay? You're not going to continue higher at this rate of change. We are up from print low to print high, not quite 6% in how long? How long has it taken us to get there? Let's just see how many trade days. From here to today. So that's 6 trade days. Okay. You're not going to go higher at this rate of change. So what's next? Well, what's next is this. I don't know if it started now. I don't know if it's going to start tomorrow, but it's going to start. My best guess is before the end of the week, which would be Friday. By Friday's close, I think you'll see a more two-sided trade. Now, what does that mean? Well, it means something like this. And let's just take most of last year. Last year was basically a romp interrupted by short-term declines and then more rip to the upside. But even in those rips, you had these little minor balance areas that would form along the way. And this is just the market digesting the rally. It's congestion, it's normal, it's two-sided trade. All of these things are auction market concepts, by the way. So we had these brief interludes of balance that included some retracement following these rips. Well, we're in an area now. This is a major inflection point because it's at the new all-time highs. Uh, we also have divergences in place. Could we go up another 2 or 3 days? Yeah, we could. But again, we're not going to go higher at this rate of change. So what I'm looking for here is some sort of balance retracement to one degree or another. It is impossible to know if it is going to be like this. That's not a good, like this, very narrow, or if it's going to be deeper like this. Here's a narrow one. This one was a little bit deeper in here. You just don't know, but you can begin to anticipate a more two-sided trade in here for a lot of reasons, not the least of which is that this rate of change is unsustainable. Now, I want to show something else tonight. Actually, I want to show two or three things. Let's see. Let's go to, all right, here's the breadth work that I keep. This is NYSE data. As you can see below here, we were up, had the blue histogram is NYSE net breadth. We were up had six consecutive higher closes in NYSE breadth coming into today. The market was up today on a gap on negative breadth. Something has to give there. This will be fixed tomorrow. We're either going to have the market begin to come in and maybe close one of these gaps or something, or trade a little bit lower, or we're going to have another ramp higher on even more negative breadth. I'm going to show that in just a minute. I want to point out the 5-day moving average of NYSE advancing issues reached a very extreme, it's an upper extreme that it seldom reaches. And from where, even in strong bull trends, when it reaches this level, you get some form of balance. Now, this was the kickoff rally to this particular bull leg that occurred in October 2023. But even here, you did get some little pushback in here. You got some pushback in here before you finally had, a massive crash of 1% or so that occurred here. Now, am I predicting? Do I think that we're going to see this? No, I don't think that. You could, obviously, but I don't think that. I think you're more likely to see something like we have in these legs that occurred in the rally off of last April's low, where you get more balance that takes more time and generally a deeper retracement. But at a minimum, I think what we're going to see is something like this. Okay. We have had no two-sided trade. The market has closed higher now 6 out of the last 7 trading days. And we have 3 or 4 gaps in there. Let's take another look at that. Okay, this is a 30-minute chart of the SPX. This is the all-time high. You can see we printed just slightly above it. We didn't make a new closing all-time high. But I want to show you the gaps here. We have this big gap in here. We have this gap in here. This is a minor gap, but it's a gap nonetheless. And then we have this gap in here. So in this ramp that began on the 13th, we have 1, 2, 3, 4 gaps, counting the one today. Again, it's not going to continue. Now, let's take a look. Let me clear some of this stuff off. Now, look at breadth. Breadth went out today, negative 900. You have this massive divergence between the higher high in the SPX and the lower, the negative breadth reading. I get it. I understand. I know what's driving the market, and I understand the different composition of the indices. I'm just telling you I've been using this information for almost 40 years. And still, you're not going to, the SPX is not going to go higher with breadth that's negative. Now, what we could be setting up, one scenario is we get another expansion in breadth that doesn't take out this peak, and then you get the higher high before you get a deeper retracement, and maybe you close it, get into this gap, or maybe you go lower down in here, or something like that. Uh, if we are in a bull trend and this is as important a low as it appears to be, then you're not going to retrace this entire leg, and you really shouldn't be looking for that. But we'll take it a step at a time. Now, I want to go back and I want to show you a few things. We're up. So off of this low, from print to print high, we're about, okay, 5.7%. If you go back and you look at this pattern, where you typically you'll have a momentum peak like we had here. This was really strong. This is the strongest breadth we'd seen in a year and a half. And then you have a higher highs, lower momentum. Today, actually, a higher high on negative breadth as momentum, as measured by momentum. So again, we could still see another shot higher, and breadth sets another divergence. And I want to go back and show you the type of rough pattern that you're looking for. This would be one where you have this momentum peak. Wait a minute, let me get a different one here. So you have a momentum peak, and it goes until it finally peters out considerably higher than the momentum peak, which occurred about here. This is another one here. You had a momentum peak here, and then you basically went sideways in this area for several days. So you don't have to have this big drop. We could go, you're looking for some sort of balance that includes retracement. The amount of that retracement is really a guess, and it's going to depend on a number of different factors, including the strength of the market. If the market is super strong, it's more likely going to be like this. It's possible that we get something deeper, something like this, but I think we have seen the momentum peak for this rally phase, and it is going, that momentum peak, the next cycle in this momentum peak is for some sort of sideways action to wear off this upper momentum, and it could wear off by just going sideways. It could be sideways and include a big drop, or it could just be sideways. We go ripping higher another 4 or 5% before you get a 2 or 3% retracement. So that's sort of what I'm looking for here. This is an obvious inflection point. Everybody and their brother is aware of where the SPX is trading. So these areas, when they're so obvious, tend to get squirrely and gamed. Be aware of that. But the situation tonight with the market, the SPX gapping higher, holding that gap, and then printing at a new all-time high on negative breadth, this is going to be quote unquote fixed very quickly, likely tomorrow. You guys have a good evening. I will update again this weekend. If you find value in this, please like and share. Make comments. I'm happy to answer any of your questions. Check out the other information on the website. I'll speak with you again soon.